Hi and welcome to this week's Big Picture, and this is Kim Watson speaking. Okay, quite a bit to run through today. I don't want to obviously dwell on things too long, so I'm going to go through the most important data first. So what we've got going on this week, starting off the US dollar, quite light really in real terms. The Fed speakers are not allowed to speak from this week onwards, I don't believe, with the meeting next week. So no Fed speakers to be coming, although there was a lot of waiting around last week to see if anyone was to spill the beans on the potential cuts. Now, as it was, it didn't actually say there'd be cuts, they just said they'll be accommodative. So we'll see. The dot plot is showing it's due in June, so that's this next meeting. They've told us not to base too much on that because it can be variable, which we already know. But however, the market has already priced in 2 cuts, and that's more reliable than their dot plot, to be honest. So Fed Watch is looking at 2 cuts. The first one in July, not in June. So I would suggest if there was a cut in June, that would be quite a shocker. However, with a low employment data, lower than expected jobs numbers, they may be forced to do it sooner rather than later. So we might actually see something happen in June, in next week when they meet. So something to look forward to next week anyway. As I say, no more speakers, so they have to go quiet on that front. What's the asset managers doing with the money? Well, they're dropping their long positions slightly. Hedge funds are increasing theirs slightly. Overall, what we've got this week, inflation out on the 12th, that's Wednesday then. Thursday there's an OPEC meeting. It really runs through for most of these. I mean, if these countries are affected by it one way or another. And then we've got retail sales on Friday. So not a massive day in terms of data coming in the week ahead. So we just left to Trump and his tweeting. Okay, or tweeting, that's it. I don't know, get the two mixed up. Anyway, moving on then, Euro dollar. Draghi did his best last week, and his best wasn't great in real terms. However, did give a little bit of a kicker and a bit of buoyancy to the markets there. The asset managers increased their long positions slightly, and the hedge funds reduced their short positions slightly. So overall, positive there for the euro. In terms of Draghi's ECB conference, he's opening the ECB conference on the 12th, so maybe he'll be able to say something more there. I would be surprised if he says too much that hasn't already been said. I think it's going to be quite a quiet week in terms of the euro data. So it certainly is for data coming out of in significance. The pound, well, interest rates left alone for now. We do have various MPC speakers this week on the 10th, and then that was today, funny enough. Just realising earlier today we had the GDP and manufacturing production data came out negative. Didn't help the pound at all, helped us. And if you notice the hedge funds, the COT analysis getting more and more bearish. Real beauty for the bearish side there, so really looking to sell into rallies, technically bearish as well, so that really does fit quite nicely. It's actually dropped a class, as I'll move on when I show my summary later. Yen, okay, no increases are going to happen there, nothing on that basis. One thing that on the COT analysis, the positions dropping. These were quite significant, 40, 50,000 on both sides of the fence there. They're dropping down quite significantly. No news due this week apart from the OPEC, which can affect the yen significantly at times because they are a net importer. They're a total importer. Got none of their own. Aussie dollar, they've cut with last week. They've got apparently 0.75% of cuts priced in over the next 12 months. Their focus, they gave that away, is on jobs. So there's a desire to reduce the rates as necessary to create the stimulus. Now, asset managers reduced their negative holdings here. It looks like there may be some sort of bottoming here. At the end of the day, they've still got room to manoeuvre. They've got they can wipe off 1.25% and still be better than the euro in real terms. Jobs are not that bad at all, although not as good as they'd like them to be. And so maybe, and it sits really there on the commodity side, etc. Maybe they've got some potential to do a bit better. It'll be interesting tomorrow's business conference data, see what comes out there. We've got the Reserve Bank of Australia's assistant governor speaking on the 12th, and an employment report after they've talked about focus on jobs. That will be significant for this week for the Aussie there. But it is a bit of a mixed bag there. Long term still downtrend, bit choppy. We had a good reasonable week last week on the Aussie dollar in terms of retracement, but that's changed. Canadian dollar, I'll talk about that in a minute. Canadian dollar then, there wasn't a hawkish tone expected, which probably disappointed some, but jobs front was good on Friday. It's their next change was possibly on the upside. It's promoted the Canadian dollar a little bit with its funny old things going on there, i.e. reasonable data. Asset managers, funny enough, they've reduced their negative holdings there. Okay, the hedges are increasing there somewhat, but for now it's well, a bit of a mixed bag. In terms of balancing this all up, what should we see here with the Canadian dollar? Well, but may see a little bit more strengthening of the dollar. Remember, I'm looking at US dollar, Canadian dollar here, so it's positive, and this effectively net positive. So all in all, there's a marginally more bullish on that for further downside. Okay. New Zealand dollar, they cut in May, negative figures. The hedges, leveraged money has gone negative now as well, hence this bright red bit here. It is one of my weaker pairings. It's certainly the weakest lot in overall picture, and a bit choppy, maybe turning over now. S&Ps saw some, actually I'll put my arrow, I haven't corrected that arrow, slightly more positive news actually. That green arrow should be pointing upwards marginally. Should have switched that around. More positive data there on the hedge as well as fewer short positions. All in all, was a bit choppy. It's questionable still. I mean, whether we're just have finished a bit of a retracement before another move down. But let's have a look at that technicals in a moment. Okay, that's the sort of the fundamental. And how's it scored in on my scoring system here? US dollar, in some respects, it's still the strongest. In terms of change over the 3 months here, it's sort of dropped a little bit here. It's dropped down a notch. Canadian dollar pitching up and improving slightly. Yen's still the best improver over 3 months in terms of price action, or percentages relative to other markets. Sentiment, the US dollar still remains bullish. Euro sort of in second place there in terms of the number of contracts that are open. It's seen as maybe a hedge for some, I don't know, but it's still seen that sort of bullish move. Canadian dollar, we're sort of seeing some positiveness on the economic strength there. Switched places with cable there in terms of its position in my ratings at least, and that in turn has brought it up to what I believe is, with the change over 2 months as whatever else, made it slightly a stronger potential, particularly with interest rates potentially, even if they stay still and they don't get hawkish on them, they're probably with the level they're at and everything else, and the employment, the economic data there also is positive. Yen, economic strength, well, middling. COT sentiment, okay. Change over the month, as I say, it's the biggest grower, so it may have still some potential there. The weaker pairings then, well, the euro's sort of the pound's just sliding a little bit there. Wouldn't be too much, just kick it over a little bit further actually, but for the general economic data that's been coming out up until now, well, as I say, that has dropped it a notch at the moment. It could even drop it another notch. Aussie dollar and New Zealand dollar. New Zealand dollar looks the weakest, and as I said with the actually. Remember, I did say it's gone negative here, so it's really getting quite a negative number sitting there. In fact, if that gets much more negative, I may actually look for a bounce, because that's what we tend to get when it gets to extreme levels, more extreme levels, but it's getting towards that zone. So all in all, weaker pairings of these three here, stronger pairings possibly looking at currencies with CAD against a couple of these pairings maybe work well, although they are, of course, the three of those, if you're looking Aussie dollar, New Zealand dollar, CAD, or either of any of those CAD wise, you're looking at commodity based currencies. But as I say, the Canadian dollar and the Canadian economy seems to be in slightly better shape. Okay, that's on a fundamental basis. Let's quickly run through technically where I am, and just looking here, weekly basis first. Euro, good sound bar last week, but it's run bang into its weekly 200. Maybe it'll break through there, but it's we'll see. There could be more of a retrace. As it's sort of, we're at a sort of a point in crossroads. It put a higher low in, confirmed, as I said last week. Well, we've sort of seen a further retracement there and a secondary higher low, but it's at a key point here with the trend line, the R2 weekly R2 pivot, monthly R2 pivot. So it's at that sort of point where it could roll over. However, it's sold off a bit today, and this is late at what time? 21:50, half 9ish, and it's pulled back up. So it's looking like, well, it's had a taster down there, not got quite to the weekly pivot, pulled back again. Maybe it could break out. There could be more upside there at the moment technically. The pound really is, I mean, it picked back up yesterday, last week. It's pulled back down, tested its lower band there, maybe bouncing from there. It had a good sell-off today. I do wonder if there's more of this downside to come. Fundamentally, it's not looking so pretty. I think if we see any more, for sure, if we see any more sort of negative numbers coming out, we could see a bit more rollover there. Well, it'd be interesting to see what Carney says if there's anything negative on his when he speaks on the 14th. I don't think it's a massively important meeting, but anyway, look at, to me, still potential bearishness and rollover. Certainly not helped by no Prime Minister as such. Dollar yen. Well, I'm still looking at this on a bearish basis, although it did put that little old doji looking bar spinning top almost at the bottom there, but it's been moving down over recent weeks quite nicely. It's moved up a notch. Moved up a notch. It hasn't actually moved up a notch at all. Moved down a notch, but it's still looking relatively solid. It could continue from this sort of bear flaggy sort of price action we've seen here and continue to the downside. It's certainly a bit of consolidation on a daily basis, which is no real surprise after it has moved as it has. But we'll see how it runs. There's still the potential for it to run up towards that monthly pivot. My preference is really just, if it does that, wait, short it, look for the short side on it. Aussie dollar, as I said, I think there could be coming for a bit of a change in this. Last week it pitched back up there, pushed back up towards the weekly 8, just threw that into the weekly bands there. It's coincided now with the daily 50, just pushed in through there. Well, actually that was on Friday as the last week. This week just sold off a bit at the moment, so it'd be interesting to see where it goes from here. So yeah, that's where we are there. Maybe a bit of divergence I was looking at earlier on. Yep, slight divergence there on Friday, so we could see a bit more of a correction to the downside, which wouldn't be unsurprising. Okay, Canadian dollar weekly wise, well, big correction finally from that sort of solid place, that consolidation even. I knew there's solid in there somewhere. As you can see, sold off quite nicely in the end. Bit of a reversal today, but It's really just closed the gap from where it opened. I'm still thinking, well, yep, okay, it's got a weekly pivot above. That may be a point if it was to come back to there to sell into, but otherwise it may just keep on rolling over. As I said, fundamentally it's slightly up my list. It's moved up the list from the Canadian dollar dropped positive, the yen dropped back one, just purely on these numbers. They're just looking, change over 3 months is improved, economic strength improved. Maybe we could see some further upside there, or downside as it is against the US dollar. Okay, that's Canadian dollar and New Zealand dollar. Struggling somewhat. Okay, so weekly basis managed to push all the way through towards its weekly 21. I don't think it's actually caught that. From there we've then seen a bit of a reversal today. Really quite a key point here for the Aussie, the New Zealand dollar. I mean the US dollar as a whole has made some ground against some of these currencies, more so the commodity pairings of the New Zealand dollar and to a lesser degree Canadian dollar, but the Aussie dollar. We'll see how it runs over. It looks to me like it could have more downside than New Zealand dollar, and as I say, with the numbers and the sentiment regarding it, it would almost fit nicely. Okay, and finally S&Ps. Looking at this, so from a weekly point, if I can get it, there it go, weekly point, bullish engulfing, huge bullish engulfing candle. We haven't seen one as big as that for, well, since last year. Most of this year's been quite modest. So actually, was at the beginning of the year, 24th of 12. Nope. So with biggish bar so far. It's normally sell in May, go away. Well, it certainly was a sell in May, but seems they've come back in June for now. I'm really looking to see if we get a bit of correction, a bit more correction on this downside though. It certainly pops up there, 1, 2, 3, 4, 5, 2, 3, 4, 5 up bars there, and now a doji bar. Have we got a bit more correction to come back for that weekly pivot? We'll see. There's reasons why this could be pushing up, of course, with a deal done with the Mexican government there on the border controls. May have been seen as popular, but it's also well, it was almost inevitable it was going to bounce at the stage with the US dollar selling off. It seemed like a good place to be, but that may turn around a little bit. In fact, I'm just going to treat you to a quick picture of the bonds, 10-year notes here, and well, they've just pulled back off a little bit there, so just switching around the yields on those, so just a little bit of divergence or whatever, we'll see. But for now, really bearish on the pound. New Zealand dollar may be bearish, and there's a couple of cross pairs that look quite good. I was looking a while back, and I was trying to identify some of the better cross pairings, and I was looking at something with Euro CAD was looking okay, but the Aussie CAD actually was one of the ones that I saw earlier on. Well, this is really, I mean, it's unfortunately accelerated the way the Aussie's fallen there against the Canadian dollar, so it's a bit of a hard one. The New Zealand dollar yen's still half decent in terms of its strength there, and it's still way up there, and that too could see more downside. It's bullish engulfing today. If we see a break of that level tomorrow, maybe we could see those lows retested as we go through the week. So there's a couple picking on the weakest, of course. Any pound pairs to go for? Where the euro pound, I don't really like the idea of it too much, although it may have further upside there for the euro. For now, I don't really like the euro that much. Pound yen, nicely set up here. Maybe a little bear flag there for more downside as well. So there we go. That's it for me. Have a great one. Bye for now.